Hello and welcome back to The Long Short. I'm your host, Tom Kehoe.
And I'm Nicol.
Well, here we are again for another end-of-year roundup episode. 2024 was billed as the super year for elections, and now in December, the fallout from democracy in action is being felt from around the world. It was a bad year for incumbents, and the US and UK were among the nations that saw a change of administration, most notably with President Trump set to re-enter the White House in January.
Meanwhile, many in the alternative investment industry are watching who will lead the Securities and Exchange Commission down the street. A new chair is hoped to signal an end to the aggressive regulatory agenda that has prompted a flurry of lawsuits, not least by AIMA, against unlawful rulemaking that exceeds the agency's mandate from Congress.
And away from the political arena, fund managers from around the world have been doing what they do best by delivering for their investors. And AIMA's global teams have been standing alongside them to advocate on their behalf and foster communities through our events and networks.
Few people have engaged with as many fund manager members as today's podcast guest, AIMA CEO Jack Inglis. In addition to guiding AIMA through arguably one of its busiest years ever for advocacy, Jack has also been on the road and attending AIMA's flagship conferences and hearing directly from the most prominent names in our industry.
We're delighted to welcome Jack back to the Long Short virtual studio to regale us with tales from his travels and give us insights into what's expected to come next year once regulators and governments have finished changing hats. Jack, you're very welcome back to the Long Short.
Thank you, Tom, and thank you, Drew. It's good to be back on.
So, Jack, this year has been full of firsts for AIMA, but one moment undoubtedly stands out: our landmark victory in the first ever legal challenge against the SEC related to the Private Funds Advisor Rule. And just last month, we followed that up with another success in our case against the SEC on the dealer rule. Both these rulings prevented what could have been major disruptions for our members globally and stopped a dangerous precedent for SEC regulation. So let me start then by asking, what were your initial thoughts when you heard the news, and what kind of feedback have you received from members since these rulings were announced?
So, of course, I was extremely pleased and, dare I say it, a little relieved with the court's decision. And I was also very proud of the central part that AIMA played in throughout this in achieving these outcomes. But I was also very reassured that our really very early assessment that the SEC were going beyond their statutory authority in making these rules did in fact prove to be correct, as the courts decided. And I felt it was very important to get this outcome to prevent the regulator from further abusing its powers through ignoring the legislation as set by Congress. So I think it's put a stop to novel interpretation of the law in the way that the regulator can propose new rules. And I think we challenged these rules on behalf of the industry and our member firms, and there was a unilateral consensus from them about the problems that they were going to bring. So the feedback that I've been getting from members since the ruling has been one of profound gratitude, as you might imagine, for what we did. So really very pleasing all round.
And staying in the US then, it really feels like everything that's happening now is seen through the lens of the return of Trump to the White House. And the next big obvious question that we've been getting a lot, and I imagine you've been getting the same, is about what the second Trump administration will mean for Wall Street and our members. So from your perspective, what do you predict or hope or expect to come from Trump's return in terms of how it might impact the US private funds industry?
Well, Drew, you referred to it in your introductory comments there. And I think really the first thing to acknowledge is that the new administration under President Trump or President-elect Trump will draw a line under the period of intense new rulemaking that we saw from the SEC under Chairman Gensler. And I think what we're going to see is a regulator that is going to be more industry friendly. It's going to have a more balanced approach that I think is supportive to both public and to private markets. So very welcome. We've got a bit of a clue as to what it might look like. Under Trump, let's call it 1.0, the basic economic formula at that time was to increase economic growth through both tax reform and lessening the regulatory burdens in the US. So we would expect Trump 2.0 to adopt a pretty similar approach to that. And I think where we're going to see that most clearly in the first instance is in the digital asset space, where Chairman Gensler was especially hostile. So I think we'll see improvements there. I think we could also see the withdrawal of certain ESG proposals that have been put forward for registered advisors and funds. But this is not to say that the agenda is going to be wholly deregulatory. We did see new rules under the first Trump administration, such as the SEC's marketing rule. But I think what we're going to see is additional guidance, helpful guidance, and relief to that rule, for example, which is going to be welcomed by the industry. And then, around all this, the key word is tariffs, Trump's favorite word, as we've all heard, and how they're going to impact countries around the world, therefore markets around the world, what that means for investments. And I think that all remains to be seen and how that will play out. But that's going to be an incredibly important feature of the next 4 years in the US.
So, Jack, looking beyond the US, then, you recently appeared on Bloomberg. The hosts were very eager to hear your take on how a second Trump administration could influence the UK and other markets as they pursue their growth agendas. So, what has AIMA been communicating to the UK government about staying competitive on the global stage and attracting business?
Well, Tom, it's hard to find any government of a major economy at the moment that's not pursuing a growth agenda, and for financial services to be one of the key pillars in that aim. And the UK government has been very explicit in saying as much. And is urging the regulators to deliver on a competitiveness and growth strategy, and is asking the industry, us, for example, to feed into that process as to how they can get more growth and how they can get financial services to aid them in that. And I've met recently with both the city minister here in the UK. I've given evidence to a House of Lords committee who are really seeking specific recommendations on how the UK can perhaps amend its rules to foster growth and competitiveness for our industry. So I've certainly been feeding into that process and been having good discussions. And I think there's a really great opportunity for the UK, now released from all of the EU's rulemaking, to make the changes that are necessary towards this aim. But let's not forget, the UK is already the world's second largest financial centre. It dominates the European time zone in its position for alternative asset managers. So the first instance must be to hold on to and preserve the good things that we already have. But of course, the US is by far the largest financial center of anywhere in the world. So my advice to government officials has been, look what they're doing. Don't get left behind when it comes to supportive regulation for the industry. And I think there's going to be much that we need to look to in the US under the new administration, which I think the UK is going to have to pay heed to.
And we do spend a lot of time talking about the US and the UK, understandably, because of, as you say, the size of the industries and our member base in those markets. But I do want to talk about the rest of the world as well, because there has been a huge amount going on elsewhere. And as we alluded to in our introduction, you have been going here, there, and everywhere throughout the year and racking up an impressive amount of air miles, I'm sure. And so I wanted to talk to you about some of our flagship conferences, and I'm going to start with our Global Investor Forum, if that's okay. I believe it was our largest ever, so clearly going strong. But beyond just the fact that it was well attended and had a lot of investors, what was your takeaway from attending the event? Was there anything that particularly stood out to you from this year's version?
Yeah, so this year's forum, which was again held in Toronto, was the 10th anniversary of that event. So we pushed the boat out a bit, and we did get over 400, over 500 attendees, I think, and half of which were investors. So, most importantly, it's a great opportunity for managers to meet and hear from allocators. And really what allocators are currently thinking about the positioning of the various parts of the alternatives industry in their portfolios. So I think really what came out loud and clear from me, and we wrote this up as one of the key takeaways, is that despite what's been going on and the excitement in some of the stock markets, particularly driven by technology stocks and producing great returns, alternatives do continue to lead very prominently in investor portfolios, and there's actually a commitment to add more against a backdrop of political and geopolitical and economic uncertainty in the world today. So picking that apart, hedge funds, we often ask the question, are they delivering on investor expectations? And I think the answer we got out of that forum is yes, they very much are. When you look at what is making up that performance, there is true alpha being delivered by hedge funds at the moment. So they're delivering on that diversification goal that investors seek from them. Private credit, where there might have been questions asked in a rising interest rate environment, really is proving very resilient and continuing to give investors the returns they seek. So private credit very much still the today's story of what investors want. And then in private equity, I think there are definitely some frustrations at the pace of distributions that are coming out from funds. There's some question marks over evaluations, but generally speaking, the key takeaway was that doesn't lessen the appetite that investors have for private equity, where they've really had some very strong performance over a multi-year period, and therefore certainly not reducing their exposures there. So overall, a huge positive feeling that investors have for the place that alternatives have in their portfolios. And if anything, that's going to grow as a percentage of their portfolios even from here.
So, if I can have 30 seconds of your time, I wanted to flag AIMA's next big foray in the UAE. So for over 15 years, AIMA has enjoyed member representation in the UAE. And like the rest of the world, we've closely watched the region's rise as a global financial powerhouse. With increasing numbers of alternative asset managers flocking to the region, the question has been, what's AIMA going to do about it? Well, announcing AIMA's Middle East Forum. It's a half-day event in Dubai on the 11th of February next year. Dive into the key issues shaping alternative asset managers in the UAE and the wider alternative assets ecosystem. And whether you're based in the region or looking to explore its potential, this is for you. Topics include the Middle East global influence, investing in the UAE, family office insights, the latest on digital assets and AI, as well as practical guidance on setting up and growing your business in the region and more. And tickets are still available. So if you're interested, go to www.aima.org/events. Book early to avoid disappointment, and I hope to see you there.
And I want to whiz you right round to the other side of the world now, because, as I say, your calendar means there was a huge amount to discuss. And we both attended AIMA's APAC forum in Hong Kong just a few weeks after our investor event. And I was interested to read in your recent Dispatches blog that you felt that the hedge fund market there was overall quite bullish. And that was based on your conversations with members. And so I just wanted to ask you to expand on those sentiments a little bit and just explain why you thought Hong Kong's outlook was overall a positive one, notwithstanding some sort of well-documented challenges.
Yeah, in recent years, there's been some questions asked of what's the future viability of Hong Kong now really being a kind of fully integrated part of mainland China, and much was made of outflows of people, businesses, money to Singapore in the first instance, and perhaps other parts of the world. And so when I've been going there recently, before this most recent trip, certainly people there that you can't fault people in Hong Kong for always being positive, optimistic, and enthusiastic about Hong Kong. But I really detected this year that it was really quite genuine. That people do feel more optimistic than they have in recent years. I think they've gotten used to the new China security laws that are now in place. The outflows to Singapore appear to have abated. And of course, I was there shortly after the Chinese government had announced its new fiscal stimulus plans, which had fed directly through to the performance of the China stock markets, which raced upwards. That's always good for Hong Kong. So all of that, really meant it felt a lot more enthusiastic than I had found on previous trips out there. So, but I think, addressing the kind of Hong Kong versus Singapore question, I think that story's sort of gone away somewhat at the moment. I think the two centres are seen to coexist with roughly equal importance, and certainly we at AIMA treat them as such. But beyond just China and Hong Kong, in the region as a whole, there are many positives. You just look at Japan, for example, where the stock market is up 20% or so in the past 12 months. What's clear to us also that away from hedge funds, private credit is really beginning to take off in APAC. So yes, I think the mood was certainly upbeat at our APAC forum, and perhaps more upbeat than I've seen certainly out there in the past few years. So yeah, that's why I came away feeling fairly optimistic by what I'm seeing out there.
And while both of you were in Hong Kong, I was in Dubai with some of our colleagues. AIMA has been very active in the UAE and the Middle East this year. So, Jack, for members and prospects listening, how do you see AIMA engaging with the industry in the region next year?
Yeah, I think, Tom, it's massively interesting, and you've been going there a bit this year, but it's massively interesting what's going on in the UAE. More and more managers are establishing presences there. I think, and you'll correct me if I'm wrong, but Dubai now has over 40 managers who've got licenses and have set up there, employing between them over 1,000 people. And there are many more firms currently in the pipeline for licenses that we're being told about. And I think Abu Dhabi too, not just to focus on Dubai, I think Abu Dhabi too is attracting firms. So, really interesting what's going on in there. And at AIMA, we're involved at all levels with our member firms who are already there, with the local regulators, both in Dubai and Abu Dhabi, and also with the specific financial centres, DIFC and ADGM. So we're very, very engaged with all of them, and it's clearly going to grow further there, in my view. And so we're hosting a conference out there in February, which is certainly the early signs at the moment that that's going to be a pretty popular one to attend. And, we did publish this year also to satisfy the curiosity that firms who are not there about whether they should consider setting up in the UAE. We published a guide for setting up in the UAE also this year. So there's a lot more we're doing there, and I expect that's only going to continue next year as well.
And one of the highlights for AIMA this year was our inaugural Innovation Day. I was genuinely impressed by the range of technological innovations being explored by our industry. And Jack, were you as inspired as I was by the advancements on display?
So the technology advancements of recent years have been absolutely dizzying, and particularly to someone like me who began life really with very limited amount of technology. And now with AI so prominent and leading the way, there's much for firms to have to get their heads around, which is really why we thought an innovation and technology day was going to be useful for firms to hear about really what's new and what's out there. So very good to host an event so that members could get a clearer sense of what technology solutions are out there that can drive efficiencies in their businesses, and especially to hear from others how use cases are being put to work in AI or using AI that are driving improvements on both the investment side and within operational processes. So there's so much to have to keep up to date with here that we're going to be repeating our innovation and technology day next year, and we're also going to be producing a directory in 2025 of sort of solutions that are out there that we've identified that members will want to hear about.
As we approach the end of the year, then, as we say, it's been a rewarding one for investors in alternative assets, and a very interesting and exciting one for those of us involved. Looking to the year ahead, as we say, there's all sorts of geopolitical and technological and market structure themes that I'm sure will come forward. But what do you see then, Jack, as the major themes that the industry should be preparing for as we head into 2025?
Listen, I think you've referred to some of those things. There's a high degree of uncertainty, which is not particularly obvious by just the way some of the stock market indices have performed this year. But that certain uncertainty remains. But questions, you always get it at this time of year, is look, the S&P's up 27% year to date. Hedge funds, for example, haven't matched that. What's going wrong? That's some of the lazy press that we hear about. Fortunately, allocators do not choose investments in hedge funds and indeed other alternatives as a way to beat the S&P or any other major stock market index. But the value proposition of hedge funds will always get talked about. But as I referred to earlier on, that what came out loud and clear at our own investor forum is that those who are making allocations to hedge funds are seeing the value from that. They are seeing the alpha that's being generated, and they're going to stick with that. And I've been reading some other year-end reports that have been produced by some of the cap intro teams that are out there. And that seems to be corroborated that investors are happy with the performance they're getting from hedge funds, and will continue to invest in them. But that theme is always there. Performance, how are they going to get it? Who's going to navigate it best? Which are the strategies that are going to perform well? And typically at this time of year and into January, we get a lot of discussion around that one. But so I'm not going to yet make any predictions around that one, but I do think industry conditions, market conditions are conducive for hedge funds to continue to deliver solid performance into 2025, just as they have done this year. But so the themes I think that many managers are grappling with is kind of where's the next marginal dollar going to come into my funds from? If institutional investors are getting pretty much close to their desired weight, where's the next where's the growth in their AUM going to come from? And I think one of the big questions and themes that will continue to emerge here is to what extent are retail investors going to, one, be allowed to have access to alternatives, and especially private markets, so private credit and private equity, and in what format? And as a manager, to what extent do I want to try and participate in that? Because there's no doubt about it, is that wealth channels are very underweight in alternatives, and I think that's a theme that's been building up and bubbling up over the past few years. Will continue to be a key theme that people want to explore. Technology is never going to be far away. No one wants to get left behind in the AI race, and how they can use it effectively, both on the portfolio side as well as the operational side of their businesses. And so a lot more to come on that. And I think we at AIMA will be certainly working to delve deeper into that, work with our members, survey our members, try and understand the use cases, what's working, what's not working, and share that on a broad basis with our members. So there's a lot of things to look forward to next year, but the main theme and the happy theme is that the intense regulatory sort of assault that we've had under the previous administration in the United States under Biden is coming to an end, and we hope that we were able to work far more favorably towards good regulatory outcomes rather than intrusive and unnecessary burdensome regulations that have perhaps been the feature of the past 4 years.
So I think you've stolen that last question in terms of our priority, but what other priorities, Jack, are we thinking about at AIMA for 2025?
We're a trade association, and what we're meant to do is foster growth, do good for the industry, provide value for our members. But as I think about, and being the CEO of AIMA, kind of what am I really sort of focusing on? And I'll just give you a few. This is not an exhaustive list, but I'll give you a few of the ideas. So, the US has been key priority for AIMA, growth in the US, dealing with US issues. It's the largest center for alternatives, so it's going to continue to be a major priority for us. We now have more members there than any other comparable trade association. So we've come a long way from just our European roots, where we established ourselves 35 years ago, to being a fully sort of global trade organization, and with a very deep footprint in the US. But I think that's going to continue to grow, and there's going to be a lot more for us to do there. So that will continue to be a priority for us. And then in our sort of work streams, as I'm thinking about them right now, and where the high growth areas for us that we're going to continue to spend quite a lot of time focusing on. So private credit, we established the Alternative Credit Council about 10 years ago, and since then have seen massive growth in that sector, and that continues. And so what we're really hoping to do there, and we'll be doing next year, is deepening our research in that sector. We've just recently published the 10th edition of our Financing of the Economy, but we want to go a lot deeper with some data-driven research, and I think this is extremely important to support the industry, particularly against some of the concerns being voiced that there is some potential financial instability that could happen as a result of the growth of the private credit industry. So that's going to be a big area for us. We've talked a bit about digital assets, huge growth and huge soar of attention there since the Trump was elected. So we're going to be on the front foot there for evolving digital asset regulation. There's a lot to be done still there. And then in some of the key areas, where AIMA's got a long history in helping our members, the investor manager DDQ, we're going to be issuing an updated version of that in Q1. That's going to take some explaining to members, so we're going to be out there very active doing that in the first few months of next year. So we've got a lot to be getting on with, and no shortage of things to do to demonstrate our value, I think, to our members.
This has been a whistle-stop tour around the world as promised, and we absolutely could have spent a whole episode just talking about any one of these themes that we've discussed here, from US regulatory outlook to investor sentiment to our industry's innovation, or any particular market that AIMA is active in. And I would just say to listeners that if you either go to the show notes or go to aima.org, you will find a mountain of content on all these topics for those who do want to learn more about our work in these areas. But I think for now we will have to leave it there. So Jack, thank you so much for joining us on The Long Short.
Well, thank you for having me.
The Long Short was brought to you by AIMA, the Alternative Investment Management Association, the global representative for the alternative investment industry. As always, you can get the latest episodes by subscribing to The Long Short on Spotify, Apple Podcasts, Google Podcasts, and Amazon Music, or by streaming episodes directly from our website, aima.org. Thanks for listening.